Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Merricks, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss Nasdaq-100 performance heading into earnings and expectations for corporate results. Mark, it's great to see you as always. Welcome back to Trade Talks. And I think the best place to start is to look at valuations as we head into the earnings season here.
Thanks, Jill. Yeah, great to be back with you and talking about the Nasdaq-100 in the context of actually some good recent performance for a change. We're up a little over 5% year to date. If you look at, this is one of our charts that we use a lot within index research. If you look at the long running trend in terms of the price of the index going back to about 16, 17 years now, to the beginning of 2006, it's actually tracked the growth in the sales per share, right, the revenue on an index weighted basis pretty closely. Sales per share has grown about 500% over that time frame, including 7.7% for full year 2022, even though we don't yet know fourth quarter earnings. That's sort of the latest estimate in terms of full year sales growth, so not too shabby. And then price of the index has gone up 539%. That includes that 33% painful drop last year. And so if you look at overall valuations over that time period, we're actually down 27%. That is mostly driven by the 36% drop in PE that we observed last year. So, there's different ways of looking at this in terms of, over the entire time period. If you look at average valuations over the last 10 or 15 years, we're pretty much trading at or even slightly below where we've been over a very long time horizon with, index fundamentals still pretty strong. And, given all the acceleration that we've seen over the last couple of years in a lot of the technological trends the pandemic was responsible for, the fact that we're trading at a lower PE now than we were 3 years ago heading into the pandemic is pretty extraordinary to me. And I think, augurs well for a potential recovery this year. There's been a lot of damage done over the past 12 months or so to index valuations, but not so much index fundamentals.
Right. And Mark, what if we reflect on historical earnings? What did we see last earnings season?
Yeah, so last earnings season, you would think that with all the negative headlines that it was actually, pretty bad in terms of companies missing left and right, revising guidance lower, especially within tech. And, there was a little bit of that, but overall, 74 constituents in the Nasdaq-100 beat their consensus revenue estimates last quarter. The average beat was about 1.7% on a weighted average basis, 1.1%. So 3/4 of the index beating last quarter in terms of the top line. And in terms of the bottom line, we had pretty much the same percentage, right? 77 constituents beat their earnings estimates on average, 2.5% beat. On a weighted average basis, a little bit better there. The bigger companies doing a little bit better from an earnings perspective, beating by about 3.8%. So last quarter, expectations were that we might get some scary results that might take us another leg down in the index. It wasn't really earnings that drove underperformance last quarter. It was the headlines after earnings, right? Once we got into December and all the headlines started coming back about the Fed being maybe more hawkish than people were pricing in, that's really when you had that most recent nasty leg down. The index actually did pretty well last quarter during the bulk of earnings season when you had most of these beats.
Yeah, and Mark, to your point, if you look at our last chart here with forward earnings and valuation, I'm looking at some of the things that you've pointed out here in the notes, and it doesn't seem as bad as the tape may suggest.
No, it really doesn't. And I was actually a little bit surprised checking these numbers today to see that on an index weighted basis, overall the expectation for forward EPS growth over the next 12 months is 15%. I'm kind of struggling again to put the really, really poor performance last year into perspective. Of course, we know that higher inflation and higher rates breeds economic uncertainty and volatility. That has a poor impact on valuations. But The bigger part of the equation to me has always been the fundamentals, right? Are you going to see a year-over-year decline in sales growth? Are you going to see demand destruction, or revenue growth turning negative, earnings growth turning negatives? And you're just not seeing that in most of the index. In fact, the median EPS growth forecast for the next 12 months is 33%. There are very, very few companies in the index that are not already delivering positive EPS. There's only 4 constituents representing about 1% of the index weight. Those are names like Lucid and Rivian that got added pretty recently. Most of this index is delivering not just positive earnings, but also earnings growth. If you look at, that chart on the right-hand side, you can see that, there's kind of a wide spread in terms of the valuation here of constituents in the index, but there isn't a very wide spread in terms of the forward EPS growth. There are some that are going to decline in terms of growth this year, but by and large, most of the index is projected again to continue that fundamental strength that we've seen for a very long time. And if that continues to happen, you'll see the PE compress even further from about 25 now to about 21 to 22 by year end, assuming the price doesn't go anywhere. Of course, that's not the safest assumption maybe, but again, really, really interesting kind of setup into earnings season coming up. We'll be paying a close attention to see if, again, this strong fundamental story has changed at all going into this year, and maybe will help us get some sort of a longer term recovery going.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.